Okay, I think we're ready to go now. I can see the participants starting to slow down, so I think we've got most people on the call. Welcome everybody to today's webinar, brought to you by Giant Group and Michael Page. Giant and Page have a long-standing working partnership together, and we're really delighted to support today's session around the NI increase for Michael Page's contractors. What we're going to focus on is specifically talking about the health and social care levy that's being introduced next month in April, what that change is going to mean for everybody in terms of the increase in the percentage of earnings that employers and employees are going to have to contribute towards national insurance. We are recording today's session, so if you want a copy of the recording, please just put a note in the Q&A section, and we can forward that recording on after the event. I am ably assisted today by Holly, our marketing manager. So Holly, if you wouldn't mind just moving on to the next slide at this point. Thank you. So what we're going to try and focus on and highlight today is what the key changes are and what the areas are that you guys would want to consider. We're going to cover how much national insurance is increasing by, and how you guys will be affected, as well as just recapping the current state of affairs as to how NI operates, and then specifically what the increase in NI means for contractors that may be working through umbrella companies such as Giant or engaged by Michael Page directly on PAYE. I'm pleased to welcome today Tom Williams. Good afternoon, Tom.
Good afternoon, Dan. Hi, everyone.
So Tom's a senior business development manager here at Giant, and he manages the relationship with Michael Page, as well as helping other clients manage their contingent workforces with all of our services here at Giant. My name's Dan Haslam, I'm Group Sales Director, and I'm also a member of the board of the FCSA, which is the UK's leading membership body for umbrella companies, limited company accountants and CIS providers, and I'll be chairing today's session. So what we've tried to do today is make the format conversational. What I'm going to look to do is put questions to Tom that he'll be able to answer, and he'll give a full view on what the legal and the sort of tax implications are of these upcoming changes. And then what we'd like to do is turn to you, the audience, for questions. So we're hoping that we get as many questions as possible. We did actually get a couple pre-registered before today's event, which we'll cover off first. If you just hover around on the Zoom functionality in that Q&A section, if you want to put your questions in as we go, then at the end of the call, I'll make sure we can go through as many of those as possible. If there's any that are particularly specific to your situation, then we'll be able to take that offline and approach you directly if it's a more specific answer that's needed. So I think at this point we're ready to go. So over to you, Tom. Could you please give us a reminder of what the current position is with national insurance and how it all works?
Sure, Dan. So most of you will probably know national insurance, NI, is a tax on earnings paid by employees and employers, mainly to pay for things like the NHS, but also for benefits and the state pension. Employers are legally responsible to pay employers' national insurance on behalf of their employees and pay that directly to HMRC. Currently, for employers Class 1, the deduction stands at 13.8% on earnings above £169 per week and £8,778 per year. Again, workers also have to pay mandatory employees' national insurance if you're over the age of 16 and earning over £184 per week, or if you're self-employed and making a profit of £6,515 or more per year. Workers will also stop contributing to national insurance when they reach the retirement age of 66. And currently, for employees' national insurance, the deduction stands at 12% between a weekly wage of £183 per week and £962 per week. Anything earned above this is charged at 2%.
Okay, so quite a few numbers there, obviously, that you're running through. Just a quick recap then. What we're saying is currently employers pay national insurance at 13.8%, and that's paid over and above an initial threshold. And for employees, same arrangement, there's a threshold, and then it's 12% thereafter. or 2% after that additional tax bracket that you highlighted, yeah?
Yeah, that's correct.
Okay, and you mentioned national insurance classes, then can you just let us know what that's all about, please?
Yeah, sure. So next slide, please, Holly, for the classes. So across the UK, national insurance is split into different categories by type of employment. Therefore, whichever class you're deemed into, and bracket means you pay different levels of national insurance. As you can see on the screen here are the different classes. For example, if you're self-employed and maybe payroll through the Construction Industry Scheme, CIS, you'll therefore be placed into Class 4. I assume for the majority of people here, including myself, who are employees and maybe payroll through PAYE or Umbrella, again, you'll be therefore employees and placed into Class 1.
Yeah, no, I think that's a fair assumption. So we've got a clear understanding then of what the current position is. So what's going to change from April?
Yeah, so as we know, the key reason to the increase in national insurance in April is due to the ongoing COVID-19 pandemic, due to a significant increase in government spending within the last few years, around 284 billion. The increase in national insurance intends to cover for the cost of the UK's health and social care deficit and paid directly to the NHS, tackling the past and long-term implications of the virus. So from April, the government has announced to increase national insurance. So for the rate of an employer's national insurance contribution will increase by 1.25%, which totals 15.05% on earnings above the secondary threshold. Again, employees also have an increase in their national insurance deduction, which will increase by 1.25%, totaling 13.25%. Also, if you're earning over £962 per week and therefore classed as a high rate taxpayer, the additional tax increases from 2% to 3.25%. Lastly, it's important to point out there is a threshold of not paying national insurance, and it's important to point out that this increase does increase from April from £170 to £175 per week.
Okay, so again, probably good just to do a quick recap because there's quite a few numbers again there. So the headline's pretty simple. The rate for employers' national insurance is increasing by 1.25%. Same for employees. Therefore, you mentioned that 2% rate currently was obviously going to be moving up to 3.25% when you go over and above the first tax bracket. And the thresholds that you referred to, so the threshold for when employees start to pay national insurance was £170, and that's going up to £175. So in one respect, the bar has been raised a little bit in terms of when you have to start paying employees and which is a benefit. But then the 1.25% over and above means ultimately the government are going to be collecting more tax. I think that's pretty clear. Now that we've been through those changes then, Tom, let's start taking a think about what that would mean then from a sort of contractor's take-home pay perspective.
Yeah, so next slide, please, Holly, in relation to the employees' national insurance deductions. Here you can see a comparison of the deductions based on a certain salary and the financial and practical implications before and after April. Obviously, as the salary increases, so does the additional costs you have to pay. So for example, if you're earning a 50k salary, you're currently paying around £4,825 employees' national insurance per year. And after the changes, an increase of 1.25%, the additional cost will be around £505 extra each year.
Okay, so that's the impact on employees. And again, what's the situation then for employers?
Next slide, please, Holly, for the employers' deductions. So as you know, employers are legally responsible to pay employers' national insurance deduction. That applies to umbrella companies and any other company in the UK. On the screen in front of you, you can see the deduction change from now and in April. And again, let's use the 50k salary example. Employers currently pay £5,680 national insurance per year, and there will be an increase of around £510 extra each year.
Okay, so conscious, Tom, that we'll have a mixture of people on the call today, some that are engaged by Michael Page directly on the PAYE service, and also those that work through umbrellas like Giant. So specifically on umbrella workers, what again, can you run us through what the impact might look like?
Sure. So next slide, please, Holly, for the umbrella illustration. On the screen, you can see the net take-home pay illustration comparison between before and after April and the changes to NI. As you can see here, we've got the app level, we've got our margin and so on for the deductions. Based on a £500 day rate, here are the following changes. So in terms of the employer's national insurance, that will increase by around about £21. Employees' national insurance will increase by around £23, and your net take home will reduce by around £36 per week. And again, this is based on a £500 day rate. If that day rate does change, you may fall into different tax brackets.
Yeah, I suppose as a simple summary, the higher the rate of pay, then the more likely, the bigger the variance is going to be, particularly because we've been talking about those thresholds applying where NI is not charged, and obviously the higher rate pay is obviously going to be impacted less so than the lower pay rate workers. So I think that seems to make sense. Specifically with PAYE workers then, Tom, how does that impact them?
Yeah, so next slide, please, Holly, for the PAYE illustration. As some of you maybe payroll already through agency PAYE direct with Michael Page, there will also be some changes as well to pay slips and so on. Again, using the £500 day rate equivalent for umbrella, factoring in the new employers and employees deductions, your take-home pay will reduce by around £30 per week. Yeah,
and it's interesting actually, you mentioned pay slips there. Well, it's worth bearing in mind that what you'll see initially, so for all employers in the UK, is that these NI increases are just going to be coming through as you'll be able to see it as increased deductions. But the intention is from next year, it's actually going to be a separate line on a wage slip where it will be specifically noted as the health and social care levy. So there's obviously going to have to be changes to wage slips accordingly. Okay, so some not so great news there, I suppose, Tom, in terms of what we've been through, but it is what it is. In terms of further considerations and maybe some silver linings, what else would you have to say?
Yeah, sure. So next slide, please, Holly, for the consideration. So again, as you said, Dan, it's not all doom and gloom, even though the national insurance increases, it does hit take-home pay, but so there are some benefits for that as well, and specifically regarding pensions. As you may be aware, one of the benefits of umbrella is paying in towards salary sacrifice pensions, and what that means is we basically process these pensions before the tax and national insurance, and therefore these private pensions are subject to tax relief, and due to the increase in national insurance, there's therefore an increase in the tax savings. So for example, for a basic rate taxpayer, for every £1,000 contributed to a private pension, it only costs you £520 rather than £540. And for a high rate taxpayer, for every £1,000 contributed again to these private pensions, it will only cost you £420, again saving £20.
Yeah, so I think that it is a good point to make. Obviously, if tax is increasing, then pensions as a way to mitigate and gain tax relief, therefore means the benefit of doing that is also increasing as well. And we know for Michael Page contractors as well as other contractors that we engage with, sort of post IR35, more and more contractors are looking for pension contributions to be made if they're working via an umbrella company. So I think if you've not considered that in the past, then again, even more reason why you might want to think about whether or not you can afford to make contributions into a pension, because the tax savings there are huge. As Tom said, for a higher rate taxpayer, for every £1,000 that you are contributing into that pension, the reality is it's only costing you £420 on a wage slip. So the numbers are clear there. So back over to you, Tom.
Yeah, thanks, Dan. Again, some positive news which may affect some of you guys on the call today. Due to the increase in NI, there will be also obviously an increase to the national minimum wage for a day rate worker. Based on, for example, for 37.5 hours per week, opting into the pension and factoring in our margin, there will be an increase to the umbrella assignment rate, which increases from £11.87 per hour to £12.49 per hour. And last and least point, I think it's really important to point out that it's all payroll processed after the 6th of April. will be subject to the new deductions. Therefore, if you've got any backdated timesheets which need authorising or approving, get these submitted before the end of April so we can actually the payroll run, and therefore you're not subject to the new deductions.
Yes, I think there are a good couple of points there. So just to be clear, when Tom was going through those minimum rates, £11.87 an hour increasing to £12.49, what Tom's referring to there is Giant's minimum rate that we can process through the umbrella, and obviously other umbrellas will have their own rates. But obviously if national minimum wage increases, that means the minimum rate that we can process also increases as well. I think that last point that you mentioned, Tom's really key, and one of the ones we wanted to get across today is that the NI increase affects payments made from the 6th of April onwards. It's not about when the work was done. So if you've got backdated timesheets, which we know contractors have, sometimes they will submit timesheets irregularly. If you have got backdated timesheets, you should be thinking about looking at trying to get them processed in time so that your payment is received before the 6th of April. Otherwise, it will be subject, obviously, to these new this increase in tax. So it's obviously important to make sure we're communicating these changes, hence the webinar that we're hosting today, Tom. But what other things are we doing at Giant to help communication on this point?
So next slide, please, Holly. As you may be aware, some of you guys may be currently live with Giant. You will already received correspondence from our team in early March in our year-end update regarding the changes to the NI deduction on your pay slips as well. It's important to point out our employee support team are constantly hosting weekly webinars regarding these sort of things, including things like timesheets, expenses, pay slips, and understanding the portal as well. And I personally will be hosting regular webinars moving forward with any future changes in legislation or changes to the industry in general, with regarding anything, whether it's agency facing or contractor facing as well. Again, there's ways to reach out to us, contact numbers, emails, live chat facilities, and via the portal as well. And lastly, what I will say is I'm obviously the account manager here at Giant for Michael Page and have been for the last 2 years. I work both on the umbrella team, onboarding contractors like yourselves, or client facing or agency facing for them as well. So I'm well versed in umbrella in general. So I'm more than happy to accommodate for any questions you've got moving forward regarding pay illustrations or any impact on take home pay.
And I think also for those that are listening to the webinar today that are engaged by Michael Page directly on PAYE, that exact same point would stand for you to contact your consultant at Page if you've got any questions or queries on those changes. So I think at this point then we're done on the set questions that we wanted to run through to explain what the current position is and the changes and how it might impact. So I think now we can move on to the Q&A section. So just as a reminder, as I said at the beginning, if you've got any questions that you want to ask us, please put them into the Q&A section. We've got another 10 minutes or so now where we can run through those questions. We did have a couple of pre-registered ones before today's session, so we can address those first. So Tom, the first one we had was when we send over illustrations, and this is obviously umbrella related, when we send over illustrations, what NI figures are you using?
Yeah, so currently at the moment we're using the current national insurance deductions. However, our internal calculators that the Welcome team use to illustrate you guys when you call up online or on the phone, and the online calculator on our website will all be updated from the 1st of April.
And what was the thinking for us to pick that date, is to sort of do the update from the 1st as opposed to the 6th?
Yeah, so when we illustrate you on that 1st of April, the more likely chance when we get onboarded, you will already be in line with the new deductions from April. So it's best to get it done a week before to make sure when payroll comes that weekend, you'll be subject to the new deductions. Yeah,
and we're giving people a more reasonable idea of what their actual take-home pay is going to be. So I think that makes sense. And then the second question we had was, what's the deadline for timesheets to be processed? Which is probably a Michael Page specific question, I think. But you got an answer for us?
Yeah, definitely. So, I mean, just to get you an idea of how the process works, Michael Page send over a DX file on Wednesday. Basically has all your details for your timesheets on there as for payroll to run on Friday to hit your banks. Therefore, for all the details for the backdated timesheets for the last weeks or months, if you've got any outstanding, they must be processed to Page before Tuesday, the 29th of March at 3 p.m. That's for both PAYE and Umbrella.
Good. Okay. And then the last one was, how can I find out what my new take-home pay will be?
Sure, whether you're payrolled currently through Giant's Umbrella, an alternative umbrella company, any other payroll solution, or looking to maybe find out more information in general, I'm more than happy to accommodate. Drop me an email on thomas.williams@giantgroup.com or drop me a quick call. I'm more than happy to give you the information, including your take-home pay and the deductions.
Good, thanks, Tom. So I'm just looking into the Q&A now. Again, guys, if you've got any questions for us before we look to wrap up today's session, please put those questions in on the Q&A slide. We've had one come over. Hello, thank you for the presentation. You're welcome. Please, if possible, I would like to receive the recording of this webinar. Thanks in advance. So that's, yeah, absolutely no problem. Holly will be taking a note of those requests and making sure that we trip on the recording if you so wish. So happy to do so. Next person who's asked the question is, I'm currently on PAYE. Will I benefit if I move to umbrella or limited company? Okay, so you're currently getting paid on PAYE, so obviously you're going to feel the impact of these tax deductions. Moving across to an umbrella company, will that help you from a net take-home pay perspective? Well, I think the answer there will be, depends on what pension arrangements you want to leverage. So if you're PAYE currently with Michael Page, I don't know whether or not you're supporting from payroll and pensions through Page Group, but similarly, if you're moving across to an umbrella company, one of the big benefits, as we touched on in the session, is your ability to make salary sacrifice payments in. So that's definitely a point to consider. Working through a limited company, you also mentioned as a, would I benefit if I work through a limited company? That will depend on whether or not you're inside or outside of the dreaded IR35. Obviously, if you're inside IR35, then again, really, if you're moving across to work through and get paid through a limited company, but inside IR35, then the deductions are going to be very similar to whether or not you're getting paid PAYE or through an umbrella company. But there can be a number of contractors, and we see this at Giant, that will choose to work in that way, often because they've got specific tax planning arrangements that they're doing with their limited company. But from if you're inside IR35 and you're making a choice between PAYE, umbrella company or limited company, it's really a decision that you're making around what your preference is and probably taking into consideration what the other benefits are around those services. So what are the benefits Page Group are providing on PAYE? Similarly, what are the benefits that Giant or another umbrella on the approved supplier list would provide as part of their service package? So probably worth having a chat with Tom from Giant's perspective, and he'd be able to let you know what the take-home pay would look like and make it clear on some of the other benefits that would be available to you. That we then had another point on, it's not really a question, someone was just saying I've got a current rate of £175, so I'm assuming they're trying to get an indication of what the net take-home pay will be. Again, you've got Tom's details up on screen here. If you want to take a note of his email and his phone number, then contact Tom directly, and he's more than happy to sort out some take-home pay illustrations so far as what the position would be if you got payroll through Giant on that. I'm not seeing any other questions come in at this stage, so I think we'll wrap up here. Thank you very much for joining today. We really appreciate it. We hope you found it instructive. We will make sure that we send the recording on afterwards to those that attended. Thank you to Holly for supporting us in the background with the slides, and thank you, Tom, for your input on the questions that we posed. Just remains for me to say once again, thanks for attending and have a great afternoon. Thanks, everyone.
Thanks, everyone.